So I almost had a client that wanted to file her tax return really quick, easy, 15 minutes, TurboTax type of thing. And I stopped her and I said, wait, you could be losing thousands of dollars in refunds if you just don't cross your T's and dot your I's. So let me tell you how I helped her and I saved her from getting so much more money. My name is Priscilla Prado, owner of Midwest Bookkeeping. Let me tell you about this. My friend was telling me about how it's very easy for her to file her taxes, and she goes online and it's a 1-2 click and that's easy. She was also telling me about how she has a few dependents. She's a single mother. She's head of household. She has a dependent that is going into college, and she has a couple more dependents that are under the age of 16 or under the age of 17. And so she was telling me how, well, she's losing a dependent. She doesn't, need to put her college student into her taxes as a dependent anymore. And I stopped her right there and I said, wait, you are still paying for your dependent's school. You're still paying for their roof. You're paying for their food. You're still supporting this child. So you are still allowed to claim your dependent on your tax return. That's the biggest myth, that people seem to think that once a child turns 18, that you don't have to put them on your tax return, or you're not allowed to put them on your tax return. Biggest myth ever. You are allowed to put them on your tax return. Actually, you get educational credits. You get the American Opportunity Credit. You get an education credit for putting your child through college. And how that works is that the school, the university, or the college gives you a form called the 1098T. That form is given to the students so that they can give it to their parents, and their parents can use it on their tax return to claim those credits. So just because they're 18 and they go to university, or let's say they're staying in the dorms, it doesn't mean that they're not allowed to be added to your tax return. And you are still allowed to put them on there. And now that you still have your other two dependents that are under the age of 17, you can still qualify for the child tax credit for those two dependents that are under the age of 17. And now you have this over 18 dependent that is going to college, and you are able to claim those educational credits. That can be up to $2,500 or more. And also that's on the federal level. If you pay tuition, you can also add it on the state level too. So you still have a little bit more leeway there too. So we have that. We have the client who has a college student in school, and then we have the two under 17 dependents, but you're also head of household. You also qualify for that. So don't claim single. If you are a single person who is supporting your dependents more than 6 months out of the year, you are able to claim head of household. What does that also mean? So you have those two that are under the age of 17. Do you pay childcare? There is a credit for that too. So make sure that if you are paying childcare, any type of monetary expense for childcare, you can ask the childcare to give you a summary of the expenses that you had for childcare, and you can claim that on your federal tax return also. That's money more for you. Even if it's $100, $200, that's more money in your pocket. Also too, for state, there's a credit called the Homestead Credit. I'm in Wisconsin, so we have the Homestead Credit that you can claim. Now, this credit is very income driven. So if you are under 24,000, or your income is under 24,000, you would qualify for this credit, 24,320 to be exact. And so you would qualify for this credit, and it would give you more money in your pocket for your state refund. So what would you need is a renter certificate, or if you're a homeowner, you just need your property tax bill. And so this when we calculate that, when we're processing your tax return, this amount gets added as a credit and a refund to your state return. So making sure that your tax preparer or your tax professional or your accountant is asking you all the proper questions regarding your situation. Sometimes when one says, oh, I have an easy return, I'm gonna go ahead and do it on TurboTax. Yes, it's easy, but you don't know the tax law like we do. We are the ones that go every year and we study and we update ourselves to make sure that our clients are getting the maximum refund. So there's certain questions that TurboTax or these online places ask you to make sure that they are crossing their T's and dotting their I's. But when you have somebody in front of you and you start digging and you kind of hear like, oh, what about this? What about that? Did you spend anything out of pocket, or did you spend anything there? Or even just adding the premium tax credit for, let's say you're on Obamacare on the marketplace. Getting more consulting on that and how to wisely claim that is just the best bet, to sit in front of someone to be able to give you the best consulting on how to claim that credit. So why am I telling you all this? It's because you could be leaving money on the table and by not going to an actual tax professional that can really help you save money and maximize your refund. So not all tax professionals are the same. But we here at Midwest Bookkeeping, we're a small business. We focus on family-oriented clients, small businesses, to make sure that they are getting the maximum benefit. So whether it's with me or somebody else, make sure you choose somebody that is looking out for your best interest. If you learned anything from this video or would like to learn more, give us a call here at Midwest Bookkeeping at 414-509-1441, and we'd be happy to set up an appointment for a consultation. Please stay tuned for our next video.